Well, Patty, I really enjoyed the episode today about QuickBooks integration, cash discounting, card not present. I mean, it's a pretty interesting episode, I think, today.
Oh, I think it's chock full of really good information, really good advice. I think, as we said, as Tom set up in the interview, and as you said in the questions from the field, there's a real opportunity now for ISOs and agents to go after card not present for cash discounting. The race is on. If you're ready, start going, because the opportunity is not going to be there forever.
Yep. So we talk about that in the interview with Tom, and then in the questions from the field, I talk about cash discounting compliance and this idea of this opportunity we have with card not present. And then Patty, tell us about the insiders report.
I just am transmitting some really, really positive economic news, not just for the holiday season, but the holiday season is definitely going to be bountiful.
Yes.
And I think, some really important numbers that put a really good perspective on consumer spending.
Love it. And then, of course, this episode is brought to you today by NMI.com. Head over to NMI.com. And, that is such a great company. We're going to talk more about it after the interview, actually, because NMI has some interesting technology along these lines as well that fits nicely into today's episode.
Yeah. So you ready, James? Let's go.
Let's go.
Welcome to the Merchant Sales Podcast.
Hey, everybody. We're here today with Tom Aronica. He is the founder and CEO of Biller Genie. How you doing today, Tom?
I'm doing very well. Thanks for having me.
Awesome. Well, I was so excited when I found you through LinkedIn. I know we connected there because, there's been several trusted partners over the years that have the QuickBooks integration, and they've all just kind of gone by the wayside. And my consulting clients are always like, how do we connect with QuickBooks? And I'm like, I don't know. Good luck with that, So I found you, we connected. And so I'm really excited to talk about QuickBooks. And even we're going to weave cash discounting into this conversation as well, which I know is something that you're passionate about. So before we get to all that, though, give us your story, Tom. How did you get into this crazy industry? And tell us a little bit about, how Biller Genie came about.
Sure. Yeah. Well, first of all, I appreciate you having me. I've been following your show for years now. So it's nice to, finally be a part of it. So, I think I got into payments probably like how everybody else has, right? Like I just fell into it. So I got into payments in 2006. I was introduced to it by a friend. I was selling insurance at the time, and, started an ISO in 2008. So grew that ISO till it became an acquisition target, which I sold in 2013 to my current business partner. So sort of the same growth path as most people that get into the ISO business. My shop was traditionally card not present. So we were like 80% Moto year after year. And we had tons of QuickBooks merchants that were coming to us, asking us for solutions to connect our mids into QuickBooks, right? And it became like a bad word. It became like somebody would say QuickBooks and we'd like try to sell around it, or like, don't worry about it. Let's put a virtual terminal on the side and you could just double enter the account information, or we'll put a terminal on your desk and you can just, reconcile those batch reports manually. It doesn't have to be integrated. Don't worry. It was like almost like a bad word. You'd hear QuickBooks and we'd run away. And I sold everything under the sun. So we sold all of those solutions that you were talking about, probably previous guests that have been on the show. Won't name names, but all the other plugins that were out in the market. We found that nothing met the need across the board. Like something worked for QuickBooks Online, but not for desktop. But it worked for somebody that did bill payment, but not for in-person, or subscription billing, but not one-time payments. And so I just decided to build it. Like I knew exactly what people were asking for. I had this vision of what we can build. And after years of trying to fit square pegs into round holes and selling third-party products that didn't work, and these long setup cycles and pissing my merchants off and ultimately losing the mids, I decided, let me build exactly what people are looking for. And that's how this all got started.
Oh, very cool. Yeah. So let's, if you don't mind, Tom, I'd like to sort of like zoom in a little bit, or maybe zoom out, actually, is more the expression here. Get a better understanding of what Biller Genie does and doesn't do. So can you maybe give us the elevator pitch on how a merchant that uses QuickBooks or QuickBooks Online would leverage Biller Genie, and how they do that?
Yeah, absolutely. So, Biller Genie is an accounts receivable automation tool, which is really just a fancy way to say that we help merchant processors, ISOs, gateways, anybody in the payment space connect their mids into QuickBooks. You know, QuickBooks owns their own credit card processing company. So traditionally, if you wanted to process payments with QuickBooks, you're relegated to having to use Intuit, right?
Right.
And if somebody's processing with Intuit, they're not processing with, you know, say you, Mr. ISO, right? So our whole goal was we wanted to create a platform that ISOs, agents, gateways, processors, acquirers, anybody in the payments infrastructure could use to enable them to connect their mids into QuickBooks, right? And at the shortest, and we support more than QuickBooks. We're QuickBooks Online, QuickBooks Desktop, Xero Accounting Suite. We're constantly adding more integrations. But in the simplest sense of the term, Builder Genie is a tool, just like having Clover in your tool belt or just like having any other gateway in your tool belt. Builder Genie is a tool that helps payment providers connect their mids into QuickBooks or any of our other integrations for that matter.
Right.
Yeah, super interesting. So if we go into a little bit more detail here on the card not present, because it definitely sounds like that's a little more of the focus here. So, you know, let's say a contractor, it's ironic, Tom, I've actually had just in the last month or so, I've had several contractors that have done work at my house and they either did not take payments or I had to like call over the phone and they would like give me a paper invoice. And I'm like, seriously, like email me a link and my secretary will pay this immediately. But like, what do you want me to do? Write a check? Seriously? So I'm just curious from a contractor perspective, as a good example of card not present, walk us through this a little bit. How would they get started with Builder Genie? And then how would they actually go about sending a customer an invoice? Is that, you know, through QuickBooks still, or is it now through Builder Genie? So give us a little more of the detail of their experience.
Yeah, awesome. Actually, awesome question. So I think that's what makes us really unique, right? Is that I always say like the little zingers that I say is we're like a turbocharger for QuickBooks, right? So when you think about a business in general, like how many times is a restaurant going to change their point of sale system, right? Probably it's not going to happen too many times in the life cycle of a restaurant. Right. How many times is a contractor or a wholesaler going to change their accounting software? It's
never.
Not going to happen. Never, right? Maybe once in the lifetime of the business.
Even when it drives you crazy, you still stick
use it.
Right, because it's just ingrained in your business and you don't have a choice, right? It's just part of what you're doing. So I think that's one of the things that makes us really unique is we're designed to work with the systems that you're already using. So we connect into QuickBooks. We are, you know, again, we're like a turbocharger for QuickBooks. And all we're doing is extracting the invoices and the customers and then sending the invoices out using the rails of the payment provider, right? So instead of that invoice going out from QuickBooks or Square or Stripe or PayPal, right? That invoice is going out on a hosted payment page that's branded to the merchant. So their colors, their logos, and when the customer makes the payment, we route it over the rails of whatever, you know, partner we're working with. So, you know, if you're using XYZ credit card processor, we just load that mid into the system. And that way we capture the transactions, you know, on the rails of the processor.
Cool. Okay. So I know that this is, you said, I believe you said that your primary focus is in the card not present, but I'm wondering if there's a business case for card present merchants. You know, are there some types of card present merchants where this is a good fit, or are you just mostly card not present business types?
So what I like to say is that generally speaking, we're not retail, restaurant, hospitality, e-commerce, right? We're generally not at that point of sale.
So generally it's like an invoice situation, right? Is that what you're saying?
Right. And what's great about it, again, to the previous point, is that they're not creating the invoices in Builder Genie. You know, like if they've been using QuickBooks for the last 10 years and they just keep creating invoices in QuickBooks, we just have the ability to send it out to the customer so that way they can make the payment, and we just redirect it. Instead of the payment going out to, you know, Intuit, the payment's going out over the, you know, the processor that refer to the business. But there's, you know, exceptions to every rule. So field service is a great example where we add a lot of value where, you know, that contractor that's, you know, out on the field that just finished the bathroom job and they don't have the invoice in QuickBooks already. We give them the ability where they can effectively build the invoice on the fly, process the transaction, and we sync that back into QuickBooks. You know, I think of legal a lot as an example, right? Think about a lawyer who's probably sending 80, 90% of his transactions, he's sending the bill in an email, right? Or he's stuffing it into an envelope and mailing it out to somebody. But every once in a while, somebody comes to the office and he's gonna, they're gonna hand him the credit card across the desk. Like we serve that use case, right?
Right.
We're not going to be in a restaurant, most likely, right? You're not going to be, using Bill or Genie at the point of sale in a restaurant, but we have a lot of restaurant clients that 90% of what they do is using, a point of sale system, and then 10% of their business is catering, and that 10% of the business they're sending invoices, and they use us to just manage, that back office, the 10%, of those transactions. So when I say we're typically not retail, restaurant, or hospitality, there's obviously use cases there.
Sure. If you don't mind, I want to sort of follow up with that because I'm a longtime QuickBooks user, and like you say, we're kind of stuck with it. I got a little bit perturbed because they tripled their prices this year, and I was like,
right, yeah.
And my accountant's like, well, you can go with these others, but But I'm wondering, what about the pricing? I mean, is there a pricing differential that makes sense? That would make more sense than, say, using Intuit?
Yeah. So I think first, from a pricing perspective, is the actual cost of the transactions, right? So that really has nothing to do with us. That's the processor that we're working with can charge whatever they want. QuickBooks Payments is typically 3.25% to 3.5% effective rate. Right. They advertise a 2.9% discount, but they don't tell you about all the hidden fees. We all know that game. Right. Their ACH pricing's gone through the roof. So they're charging 1% up to $10 for, ACH transactions as well. So as our partner in the payments business, in the payments game, right, it enables them to really go in there and offer some pretty significant price savings.
That's what I was wondering. Yeah. Okay.
Yeah. So from a pure transaction processing perspective, it's a 25, 30, 40% savings over what QuickBooks Payments is charging, right?
Okay.
And then we have a SaaS fee. So we charge, a small $25 a month SaaS fee directly to the merchant. We bill that direct. So there's no, involvement from the processor having to even get involved and thinking about, do we need to put it on our Schedule A? How do we bill for it? We sort of handle all the billing. And then we just load their mids into the account. So there's a pretty significant price advantage there.
Okay. Cool. One of the things that, kind of dawned on me as we're having this conversation, Tom, is that, I'm afraid a lot of our audience, because they might be disproportionately focused on card present, they've sold their card not present merchants, but that's not their primary focus. They actually might not be as familiar as the three of us are with QuickBooks, as far as accounts receivable and creating invoices. Could you touch for just a second on, for those people, they may not understand, why is it such a big deal that people will actually use Intuit, even large businesses, and they will pay literally 80 basis points more than they should for processing because they want it to be, within QuickBooks. What has Bill or Genie done to kind of replicate that or to keep it within QuickBooks? And it's kind of a broad question, but can you speak a little bit to that?
Yeah, awesome question. So, we've heard in the payments business, integrated payments for years, right? Everybody's been talking about integrated payments, and that's sort of the future, and payback model. And we all sort of know that the days of door knocking and walking into a restaurant and saying, I'm going to save you 5 basis points probably isn't the best strategy to build, a big portfolio. So what we do effectively is we give that ability to bring integrated payments into QuickBooks. And if you think about it, what was interesting to us when we started to really do the research as we were building it, we found that Wall Street reports 90% of businesses worldwide still handle this process manually, right? And that doesn't mean that they're going into QuickBooks and they're printing an invoice and stuffing it into an envelope and mailing it out. But think about what we traditionally think of in terms of a V term, right? Or recurring billing, right? You go into a third-party gateway like NMI or USA ePay, and you set up a recurring billing schedule, and you have 1,000 clients that you're going to bill for $150 on the 5th of the month. And you could set up that schedule, and we automate the payment, and great, right? We solve one piece of the puzzle. At least nobody's opening up a filing cabinet and typing it into a terminal anymore, right?
Right.
But what happens on the back end side, right? In QuickBooks, they have the same 1,000 invoices or bills or line items in QuickBooks, right? And somebody's got to take that batch report from the accounting software, and they've got to go into QuickBooks, and they got to say, okay, invoice number 1, and they go into the accounting software, check, and then to go down that list, 1,000 times. Like, imagine the process for an office having to do this, right? And whether you're sending one invoice or 1,000 or 10,000, and the number of transactions that you're doing, the amount of opportunity cost and administrative capital and personal capital that you need to put into that to make sure that your books and records are clean, QuickBooks just does it for you, right? When you process a payment inside of QuickBooks, it just syncs it all together, right? Mm-hmm. That's what we do. We give the ability for the merchant, the business owner, to be able to have all of the same benefits of that integration, right? The seamless synchronizing the payments, automatically reconciling all that stuff back so that way it syncs together. But we're able to do it through an integrated system using the payment processor's rails. So the payment processor gets the benefit of the transactions, the merchants gets the benefits of the lower rates. They also get the benefit of all of that, seamless integration, and then they get the best of both worlds.
Love it.
Right.
Okay,
and
so
it's that seamless integration, just to recap. It's that seamless integration that makes QuickBooks stand out from the traditional way of doing things. I mean, and that's why businesses, small businesses like myself, as well as large businesses, love it, because you don't have to go do that manual stuff. Right. And so, and from my understanding, I mean, it's like millions of small, mid-sized businesses are on QuickBooks these days, right?
Yeah, well, so again, Wall Street, right? Wall Street says that 53% of small businesses in the United States are card not present, our motto, right? They say sending invoices, but the actual majority of SMBs, right, less than 50 million a year in revenue, the actual majority are the ones that are sending invoices. Right. And we as payments people have always traditionally gone after the retail, the brick and mortar, right? That, and especially think about this time of year. I'm not sure when the show is going to, air, but we're recording this middle of November. Think about the time of year, right? Restaurants not talking to you about switching their credit card processing. Retail's not going to be talking. They're worried about, Black Friday and closing out their books. Whereas this is the perfect opportunity for those service-based businesses where they're looking to cut expenses, where they're looking to optimize process, right? Where they're slowing down and they have the time to actually look at this. This is the perfect time to be able to explore this. And again, it changes that conversation from somebody asks credit about QuickBooks and you put your hands up and you're like, oh, we don't want to deal with it. We don't want to talk about this. Let's sell around it. And what a lot of our partners are doing now is they're targeting that 53% of the market, right? So they're going to market saying, hey, look, let's talk about QuickBooks. Let's lead in with, do you send invoices? Let's try to solve a problem and add value into the conversation. So that way, instead of it being merchant brings it up and it's a reactionary approach, now it's, hey, we've got a tool. Let's go after this market because nobody else in the payment industry is. So we've got this untapped market and resource that we could use and go after. And now we're not competing against who's the next guy that's going to come in and offer 5 basis points less than I did. And we give this integrated solution that adds value to the whole portfolio.
Cool. Well, and I think too, to your point earlier, it's really not even just QuickBooks. In other words, the long tail there of other accounting software is going to be Xero and, and the others, which I think sounds like most of them you already integrate with as well. The question could just be, which accounting software do you use? And the answer is most likely going to be one of the ones that you guys integrate with. So I think that's cool. Okay, so let's shift gears here though. And let's talk about a topic that's near and dear to the hearts of all of our listeners, which is cash discounting, right? So I was super interested to see how you were doing this. I went on your website and did a little bit of digging. So talk to us about this. How are you enabling these card not present merchants who, by the way, from what I have seen and heard, are much more open to cash discounting than even card present.
Yeah,
so talk about what you've done with cash discounting and kind of how you structured it through Bill or Genie.
So I think the magic of how we handle cash discounting, surcharging, we call it technology fees. The real magic is in the reconciliation, right? And if you think about how cash discounting works typically in the environment, right? Most processors that we talk with are putting their merchants on a daily discount and they're settling out the net amount of the transaction to the bank account, right? So
Right.
they have $100 invoice, let's say, or $100 bill or $100 payment, and there's a 3% surcharge, right? Or convenience fee, or however you want to call it. But we charge the card for $103. And then the next day they get a settlement to their bank account for $100. Right. What most business owners are doing is they're going into their books and records and they're saying, I got $100. Right.
Right.
But they really charge the card for $103.
Right. And they have to pay sales tax on the 103. And so
right. And their
problems.
1099K that comes from the processor at the end of the year says 103.
Right.
Right. And they actually had a $103 transaction with a $3 fee.
Right.
Nobody actually ever records that. It becomes a reconciliation nightmare.
Right. At the end of the year, their accountant says, hey, you didn't pay enough sales tax. Your numbers are off.
At the end of the day, at the end of the week,
right?
When
exactly.
you're trying to reconcile the transactions, right? I got a payment for 103, but I got a deposit for 100. What's going on here? How do we we manage that? So I think that's the magic in what we do with, what we call technology fees is we automate that entire process.
Sure.
We have the right revenue recognition. We're able to, do the entries into the accounting software to make sure that they recognize the $103 revenue, that we can separate out the $100 transaction from the $3 fee. We keep their books and records in line. So that way, when it comes tax time at the end of the year, or when they're submitting their stuff to their accountant at the end of the month, that it's not costing them thousands of dollars from their accountant to do all this reconciliation work and look at every single transaction, right? We just do it on the fly with every transaction. So keeping that sales tax compliance in check, right? Making it match what's actually happening in the batch deposits, making it match that 1099K at the end of the year, and doing so in a way where the merchant doesn't need to do any extra work and the processor doesn't need to do any extra work, and it's fully automatic. That's the magic of the system.
Touch for just a second on ACH. Because I believe, if I remember correctly, the way you had it set up is like they could do it where like ACH is this like other option where maybe they don't charge a fee or they charge a smaller fee or something. Is that right?
Yeah. So today, credit, debit, ACH, Apple Pay is supported in the system. They're able to sort of direct the transactions to the least cost route. So if they wanted to charge a technology fee for credit cards, but not for ACH, when that customer gets the invoice, it's going to say, you have to, pick, two options for payment. You want to pay by credit card or ACH. If you pay by credit card, it'll have the cash discounting language or the surcharging language, or we direct them over to ACH, which, is obviously much less expensive.
Yeah. And I think that's so crucial because, again, trying to get really practical with this for our audience, like when they're out selling card not present merchants, that is exactly what most of them want. So the reason that they don't make it easy to accept a card is not because they don't know where the technology exists to do that. It's because they don't want people to pay with a card. Right. The reason they don't want people to pay with a card is it's a $5,000, $10,000 furnace job, and it's going to cost them an extra $260 to run the rewards card. And so they don't want to promote that. Right. So instead they're like, mail us a check, even though it's massively less convenient for them. So what they want is the ACH option, and then be able to say whether it's a lower fee or it's no fee or whatever. The ACH, most processors are able to do that at a lower cost. So anyway, let's jump into kind of how this technology setup works for the ISOs. Now I want to let's shift gears, talk about the ISOs and agents. So my first question is just like, in general, if I sell for FIS, Fiserv, TSYS, whatever, how does this work? Do you have direct integrations? Is there a gateway involved? Like how does that generally work? Or maybe it varies. I don't know.
Yeah, so we're completely processor agnostic, right? Our entire distribution model is working with payment providers, financial institutions. So we are designed to work with the rails that our partners are already using. So we have gateway integrations to USA ePay, NMI. We're constantly adding other agnostic gateways, right, that support every major platform. We have a few direct integrations, direct to different processors. But typically speaking, we have processors or ISOs or agents that will either set up the gateways themselves and then just feed us the API credentials, or some look to us to set up the gateway and we facilitate that whole process and they get a VAR sheet. But we're just completely agnostic. So whatever processor you're working with, so you, Mr. ISO, are working with, we can support. We can load your mids, into the system. We take a very, 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 very hands-on approach. So I'm not a software guy that woke up one day with a cool idea to build a software company, right?
Right.
I've been in payments for 15 years. I've been on both sides of the fence. I know exactly what merchant level sales entails, right? And so we built the system to support our biggest clients, which are our partners. So we're extremely hands-on with the sales teams. We help with pre-sales demos. We help sell the deal for help you sell the merchant account, right? And so one of the things we're really, really good at is we work with your teams to, help get in the door, right? And then we're extremely hands-on with the onboarding process. So you sold QuickBooks plugins in the past. Right. Setting one of those up usually requires a degree in computer science, right? And it's a 2-week process and it's extremely disruptive. Right. We can set up our accounts in 5 minutes. So we do it all. We become like a third-party installation department for your, ISO teams. And we make it extremely easy for you to be able to link your accounts, whether it's credit card, ACH, both, none. And then our team's going in there and helping them connect QuickBooks, getting those initial settings, set up, and we're all sort of have the same goal, right? Get them processing within 24 hours of the mid being approved.
Sure. Right. So, talk to us a little bit about the economic model, and you've already touched on this, so maybe this is a really trivial question, but I'm assuming from what you said earlier, this is you're billing the merchant directly, so the money the processor is going to make is on the processing, but give us some more detail, or maybe that's all there is to it.
Yeah, what the economic model.
That's all there is to it, right? So we don't participate in the processing at all, right? We want to enable the processing. So we have a lot of, ISOs that'll come to us that are doing 50 deals a month. They start working with Builder Genie, and then next month, they're doing 100 deals a month because they're going after that other 50% of the market that now they can target, right? So it's all about helping to grow mid-volume transaction volume. We don't participate in ACH or the credit card transactions at all. We bill the merchant directly that $25 monthly fee. So that way the ISO doesn't have to deal with anything on their side. They don't have to deal with billing. They don't have to deal with, receivables, putting it on their Schedule A. We make it super, super, super simple for both the merchant and the ISO to do business with us. And the whole point is that we want to add value into that conversation. So that way the ISO can sell more mids and get more transactions.
So the $25 fee is basically all that you get out of the deal. The 25 monthly. Okay.
Awesome. Yeah, love it. Well, this has been very, very insightful. I know our audience is already loving it. And so my next question and final one here is just where do you send them to learn more about Builder Genie and kind of partnering with you guys? Where would you send them to learn more?
Yeah, very simple. Reseller.buildergenie.com. If you just go to reseller.buildergenie.com, you'll find all the information about the program. You'll find some basic marketing materials in there, and then you could, put your contact information to have one of our partner sales teams give you a call. Reseller.buildergenie.com. You can also email us at resellers.buildergenie.com, but reseller.buildergenie.com. That's going to be your go-to.
And you said that email is resellers@buildergenie.com, right?
Yep, resellers plural @buildergenie.com, or if you want to go to the website, reseller singular.buildergenie.com.
Perfect. Tom, thank you so much for taking time today. I know our audience is going to eat this one up, and I really appreciate you sharing the insights today.
Yeah, really Absolutely. Great stuff, Tom. Thanks.
James, Patty, thanks for having me.
So Patty, today we talked to, of course, Tom at Builder Genie. It has a great solution with integrating with QuickBooks, but some of our listeners might be saying, well, what about those clients where they don't use QuickBooks, or I don't want to get involved in the accounting side. I just want to offer them cash discounting, card not present. Well, guess what? NMI has a fantastic solution for this where you can add a fee on, and they have the ACH option as well. So these, concepts we're talking about today, one of the things that you can do is you can really get a great setup outside of the QuickBooks kind of ecosystem. If you just want a regular old, cash discounting setup for card not present, that would be one that I would definitely look at. And I'm sure I didn't ask Tom, but I'm sure Builder Genie has an integration with them as well. But definitely
he actually said they did.
They did. Okay, good. Well, there you go. So again, NMI, such a great company. If you want to learn more about them, head over to ccsalespro.com/NMI, ccsalespro.com/NMI.
And now, here is questions from the field with James Shepard.
So Patty, I want to talk today about cash discounting compliance, and I want to really focus in on card not present. But before we get to that, I actually did a poll last week. It ran for 1 week on my LinkedIn account. And the question was, are you/your ISO selling cash discounting and or surcharging? Okay.
Okay.
So we had 135 votes, which is pretty good for a small industry like ours.
Tally. Sure.
That's a good set of data, I think. 39% sell cash discounting only. 15% sell surcharging only. 38% sell both cash discounting and surcharging.
Whoa.
Which surprised me. That was interesting.
Whoa. Yeah.
And this is the one that I thought was, interesting, especially when you go back a few years. Only 8% do not sell either.
Wow, that's incredible. Because
Yeah.
I remember I did a poll like that 2 or 3 years ago when we first started talking about this, and it was more like 8% did do cash discounting or surcharging, and 90% did not.
Absolutely, and the 90% were telling me that I was nuts for talking about it, and it's really an exciting thing. It's such a trend, and so as we continue this evolution, one of the things I'm seeing that's really like the next iteration, what would be super interesting is maybe I'll do this poll next week is what percentage of people are selling cash discounting to card not present?
Right.
I bet that we're probably at about 10% there. And in 2 or 3 years, that number is going to be 90%.
Sure.
And so as this shift happens, as we talked today to Tom about, Bill or Genie, as we see the other kind of half of merchants become interested in this, I think it's something that is such a huge competitive advantage for our industry because, for whatever reason, for publicity, PR mainly, QuickBooks, through Intuit or whether it's Square or whether it's Stripe, they really have not gone all in with cash discounting at all.
Not at all. They haven't gone in at all, really.
They haven't. Square now does have the ability. You can do cash discounting through Square, but you have to work around it a little bit. But it's not like they're out there with a commercial, eliminate your processing fees. So this is an avenue for us as these merchants say, well, wait a minute, I want to eliminate my processing fees and I do card not present. So I thought it would be interesting to take a minute to talk about the compliance of all of this and kind of how this works, because people might have questions about, just like Tom was saying a little bit ago, he has technology fees. Well, what's that? And we do a non-cash adjustment,
Right.
So when we talk about card not present, you have to understand that there are basically 2 different ways to approach this from a compliance perspective with cash discounting. Now, again, if you're going to do a compliant surcharging program, really nothing is that different there. You're going to have to check and see if it's a credit or debit card. You can only charge it on credit. So if you're going to call it a surcharge or whatever, you're going to do some kind of a compliant surcharge program, then nothing really changes. But the good news is with card not present, there's actually 2 approaches you can use to kind of circumvent that a bit. So the one that the card brands would push you to is something called a convenience fee.
Right.
And I'm not going to get into all that today. Maybe I'll do a follow-up next week just on convenience fees. They're very complex.
That's an interesting topic that probably requires an entire
yes.
Yeah.
And I will say right off the bat, I don't really recommend that. It's very complex from a compliance perspective. There's a lot of, requirements. But what's interesting about it is, I think in our industry, it's so easy for us to get like zeroed in on payments. Like, we're going to add this fee. It's card not present. It must be a convenience fee. Well, why? Like, we're not the ones adding the fee. We may be enabling the merchant to do that, but the business owner is adding the fee.
And whose convenience is it?
Right.
Right.
And the business owner can add fees for whatever they want. Like, Visa has
don't you think convenience fee is kind of a loaded term?
It is. And I think it's, Visa and MasterCard's attempt to put a positive spin on the concept of saying, reminding consumers of how convenient it is that they can use their card.
Right.
But why go down that path when, again, as a card not present merchant, cash isn't even an option anyway, right? All there is digital payments.
Right.
So all of a sudden it opens it up for the merchant to charge fees for different things. So in the case of Bill or Genie, what they're doing is they're charging a technology fee. In other words, we are charging our customers a fee because they're, getting this technology that allows them to pay with their online invoice, right? So that's fine. Just like a merchant could charge a delivery fee. It's like, well, that's not compliant with Visa rules. Visa rules has nothing to do with the delivery fee any more than it has to do with the technology fee. Like, if you're going to charge a fee for something totally different, like it's an online service fee, whatever, the thing that's interesting about it is we're talking about card not present. It kind of encompasses all the transactions. And so it doesn't really matter. It's not a payment method specific fee. right?
Right.
And so it's one of the interesting things to get around. Now, again, the ACH though is really what's bringing a very interesting piece into this because of a couple trends, Patty, that I think you'll appreciate being the ACH expert. I'm seeing that, ACH, as the government is working to speed up ACH payments, right? And again, as there is still this, significant inconvenience factor for larger tickets. I'll give you a great example of this, Patty. My family and I are going to Disney World in a few weeks.
Right.
Well, as I think everyone on here knows, Disney World is super, super expensive. Well, I'm buying, a 10-day trip for my, entire family for Disney World. So as you can imagine, buying the tickets and other, meal plans and things of this nature, we're talking about thousands and thousands of dollars. So I went through the process online. Everybody's excited. I'm putting all the names in and everybody that's going and, we're setting everything up. And then I get to the checkout page, right? How do I check out for this transaction? I mean, seriously. Right. I have plenty of money. I don't have a card that's going to approve a transaction of this size. And I'm thinking, where's the ACH option here? This is a no-brainer. But of course, But of course, Disney maybe is a little bit hesitant there because, there's a delay. Maybe the ACH goes through, maybe it doesn't, right? There's no, it's a little different than the card networks. But it was super inconvenient. I ended up having to call my bank. It took me like a half hour on the phone with my bank to get them to raise the limit on my debit card. So, because I'm not going to call my credit card company and say, raise my transaction limit there. They'd have to run a new credit report or something. It's ridiculous.
Right.
Very, very inconvenient. And so I think what's happening is there's a consumer trend towards look, I just want to get this transaction over with. I have the money. What do I need to do? And again, whether that is an option to do a buy now, pay later, which is going to be very popular for the situations where you actually don't have the money and you need a little bit of extra time on the cash flow. Right. Or whether it's ACH, I have the money, but it's in a bank account. Right. I don't have a credit card with the, X thousands of dollars.
Or I don't want to put this on a credit card. I mean, even that, right? I mean, it's a big thing. I don't want to pay interest on it.
I don't want to. Yeah, right. It's going to ding my credit report if I max out, my credit card here. And so I think where all of this comes together with cash discounting is we have these trends where merchants are definitely ready to pass the cost of processing on. They're frustrated about it. You have ACH becoming a much more viable form of, electronic ACH becoming a much more viable term of payment, right? And then you have technology now that's able to bring this all together with electronic invoicing and giving people that option to say, look, here's your ACH price. Here is your credit price, or here's where we're charging a technology fee. Here's where we're not, or whatever it is, right? That's freedom of speech. That you're not worried about, well, they can't add something on. Well, no, on these electronic invoices, they can just make that the price. Right. So all these compliance idiosyncrasies with card present of well, wait a minute. Do they need to change their menu to reflect the cash price and the credit price? Do they need to change the prices on the shelf? Well, this is card not present. None of that matters, right? So now it's it just comes down to technology being able to implement something, whether it's just a straight up, here's the fee always, or whether we're giving maybe an ACH option. And for our listeners that maybe aren't as familiar, ACH is dramatically cheaper to process than credit cards.
Actually, yeah, it actually costs a bank about 50 cents to process an ACH transaction.
Right, and so that would be for a lot of card present merchants, that would actually be a big deal. For card not present, generally the transaction sizes are much larger.
Right.
And so 50 cents on $1,000, $2,000, $3,000, $10,000 transaction is, trivial.
Nothing. Yeah. And, even those banks that jack up the price, I've never seen a bank charge more than about $5 for an ACH. Right. Well, you're talking a $10,000 ticket, $5,000 versus what, $350? $5 versus $350? Yeah.
Yep. Yeah. And so what I would tell our audience is I really believe that this is a time when you can go after, card not present merchants with cash discounting, as we talked to Tom about earlier in the episode. But we have a window here. Make no mistake about it. Intuit in 3 years, they will be offering this.
Oh, they'll
probably
figure
in
it out.
months.
In less than 3 years, I would bet.
I think so too, but definitely in 3 years. And so I think, we have a window here, right? And again, once they do, how are you going to ever sell that merchant?
Never.
What do you have to offer them? Once Intuit goes to all of their QuickBooks customers and says, click this button here and change your setting if you would like to pass the cost of processing onto the consumer. Their profits are going to go through the roof and we're done. we're not going to be able to go after these merchants again. Why would they do that? They're like, look, everything's integrated.
Right.
I'm not paying any fees. Like everything's, reconciled. Like what's the big deal? So we have a window right now where we can go after these merchants and capture that business. And so I think it's really important for everybody as we go into 2022 and you're thinking about strategy, think about card not present merchants, think about cash discounting, and maybe even with that ACH option. And again, hopefully reaching out to Bill or Genie, like we interviewed earlier, and others that provide good options in that way.
The race is on. Get going.
This is the Insider's Report with Patty Murphy.
Well, everybody, Americans are spending big. Consumers spent $638 million in stores and restaurants last month, according to the U.S. Department of Commerce. That's a 1.7% increase over September, and it was the biggest one-month gain since March, when the final round of government stimulus checks, boosted spending. Now, inflation, of course, accounts for some of the increase spend, but for example, sales of gas at gas stations rose nearly 47% from a year earlier, but then gas prices rose about 47% from a year.
Right.
But when adjusted for inflation, retail sales in October were still up 0.7% over September and 9.5% over October 2020.
Oh wow. Okay.
Which is pretty significant, especially when you account for inflation.
Yeah.
Now, a lot of this increased spending comes from pent-up demand. Economists estimate that American households have a, quote, savings buffer of about $2.5 trillion. That's money they didn't spend going out to dinner and other splurges during the pandemic restrictions. I can attest to that. I found they saved a lot of money from going out. But according to the National Retail Federation, consumer spending has been on the rise much of the year. NRF's data suggests spending was up 14.5% year over year for the first 9 months and has returned to pre-pandemic levels for most retail categories. So, all of this paints a picture of a robust year-end holiday gifting season.
Yeah.
I know I spoke to this a few months ago, sort of at the beginning, but I did pick up some data more recently. NRF had its annual predictions, and they're saying it's going to be the largest holiday buying season on record.
Wow.
They expect retailers to ring up between $843 billion and $859 billion between now and year end.
Wow.
That works out to an increase of somewhere between 8.5 and 10.5% over 2020.
Wow.
Numbers.
Crazy. Yeah.
Evidence points to all the evidence points to an early start to the holiday shopping season. I witnessed this myself. I have to say, I was traveling the last couple weekends, and every interstate highway exit that led to a mall had backups.
Really?
Like huge backups. And it wasn't just in one place. I saw it in Arizona, I saw it in Delaware, and I saw it in Maryland.
Yeah.
I was like, I was quite surprised. We're talking, like half a mile leading up to the exit. So mall owners must be happy, I'm sure. Yeah. And then I was in a small kind of touristy town in Arizona called Jerome. I've been to Jerome lots of times. I've never had to drive around the city 6 times to find a parking place.
All right.
But people are I think people are antsy. They want to get out and spend.
Yeah.
The retail data and analytics firm NPD Group reports that revenue at retailing establishments during the week ending November 6th posted a 19% gain over the same period in 2019. NPD also surveyed in October 3,700 consumers and found that about a third had already begun shopping for the holidays on the 6th of November, as of October.
Wow.
42% said they did it, their early shopping centered around supply chain concerns.
Oh, interesting. Okay.
Yeah. And I could see that. I know several people
sure.
I know who went out and bought electronics real early. NPD expects consumers to spend on average $785 on holiday gifts this year, with all categories of retailing seeing increased spending. And while brick and mortar sales are going to increase, the scale of those increases are going to be dwarfed by double-digit increases in online and other card-not-present sales, which NPD estimates will rise between 11 and 15%.
Wow. And it was up last year like 20%, I think. Or
Right?
something like that.
Yeah. So this is just, and here's the tech giant Oracle. I was doing a bunch of research on data for a story that I did for the Green Sheet. So I was like taking everybody's data, right?
Right.
But Oracle found that 20% of consumers plan to do most of their shopping in store, and 47% expect to split purchases between online and brick and mortar.
Wow. And then you have people like me who plan to do 97% of it online.
Online. You and me both, right? And here's another one which you and I have talked about a few times. Adobe expects curbside pickup to be an even bigger deal, accounting for 25% of all online orders this holiday season and spiking to 40% of orders on December 22nd and the 23rd.
Wow.
So, I know people have been talking a lot about inflation. My thinking with inflation is that, we were so depressed last year that if any increase is going to look inflationary. But I think it's good news for retailers and by extension, good news for our audience because a lot of these retailers are going to be ringing up credit and debit card sales.
Absolutely. Love it, Patty. Great stuff as always.
Thanks, James.
Thank you for listening to the Merchant Sales Podcast. Whether you are an industry veteran, processing executive, or just trying to learn about the payment space, we appreciate your time. The Merchant Sales Podcast is a joint production of Greensheet.com and ccsalespro.com, and we hope you will tune in next week for more information and tips on building your merchant services business.